Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast, episode 83, published on May 20th, 2022, titled Best U.S. Corporate Citizens and More, and presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols, quotes, and bonus material at this episode's podcast page located at investingforthesoul.com/podcasts. Now, if any terms are unfamiliar to you, simply Google them. Also, just a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Now, first off, again to our favorite industry with this article titled 5 Renewable Energy Stocks to Watch in the Stock Market Today. It's by Brandon Michael and seen on stockmarket.com. Here are some quotes from Mr. Michael. Investors keen on renewable energy stocks may be looking at the likes of Canadian Solar. The company yesterday made its first move in the battery energy storage space in the United Kingdom. Elsewhere, Algonquin Power's Liberty unit is working with Meta Platforms on a new wind power project in Michigan. With that being said, check out these renewable energy stocks. 1. Blink Charging. The company currently operates and maintains over 30,000 charging ports across 13 countries. Additionally, most of Blink's charging stations are linked via its global network, allowing users to seamlessly charge at any of its locations worldwide. The company announced record first quarter results. Blink saw its total revenue soar to $9.8 million, a massive 339% increase year over year. The company attributes this massive growth in revenue to increased product sales and service revenues. Besides that, the company also sees 3,174 charging stations, contracted or sold, a 99% year-over-year increase, with Blink expecting this momentum to persist through 2022. Should you invest in Blink stock? 2. Ormat Technologies. Ormat is a geothermal industry leader that has supplied power generating equipment for customers in over 30 countries. Apart from that, it also has expertise in energy storage solutions. The renewable energy company reported its earnings for the first quarter of the year. Ormat generated revenues of $183.7 million, an increase of 10.4% year over year. The company owes this revenue growth to its electricity segment performance, as well as its strategic capacity additions. Next to that, its adjusted net income came in at $18.4 million, rising 20.8% from $15.3 million. Accordingly, diluted earnings per share were 33 cents, growing 22.2%. The company also provided its guidance for the rest of the year. Ormat forecasts revenues to range between $710 million to $735 million. Is Ormat stock one to watch? 3. Sunrun. It has pioneered home solar service plans to make local clean energy more accessible to everyone. The company's innovative home battery solutions also bring more affordable and reliable solar energy. Sunrun reported its financial results for the first quarter of 2022. The company saw its revenue increase by 48% to $495.8 million. Besides that, it saw a 27% growth in its solar energy capacity installed in the first quarter, exceeding its guidance. Sunrun also grew its customer base by 20%, now totaling 689,774 customers as of March 31st, 2022. For the rest of the year, the company expects its solar energy capacity installed growth to be 25% or more, an increase from its prior guidance of 20%. Considering Sunrun's performance, is Sunrun stock worth adding to your watch list? 4. Solar Edge. Its products include Solar Edge Power Optimizer, Solar Edge Inverter, Solar Edge Solutions, and Solar Edge Monitoring Software. It is noteworthy that the company's power optimizers provide module-level maximum power point tracking and real-time adjustments of current and voltage to the optimal working point of each PV module. Solar Edge announced its first quarter financial results. It reported a record revenue of $655.1 million, up 62% from $405.5 million in the same quarter last year. Its solar segment, which makes up most of its revenue, brought in a record $608 million, an increase of 62% year over year. Net income came in at $68.8 million in the past quarter, rising 24% from $55.5 million. Diluted earnings per share were $1.20, up from 98 cents in the same quarter last year. All things considered, should you add Solar Edge stock to your portfolio? 5. Enphase Energy. Enphase is a renewable energy company that designs and manufactures home energy solutions. It is a global energy technology company and also the world's leading supplier of microinverters-based solar storage systems. With its smart and easy-to-use solutions, the company connects solar generation, storage, and energy management into one intelligent platform. Enphase's semiconductor-based microinverters convert energy at the individual solar module level and bring a system-based approach to solar energy management. The company reported better than expected results for its first quarter. Its revenue came in at $441.3 million, exceeding the $420 to $440 million the company forecasted last quarter. Additionally, this signals a revenue growth of 46.2% compared to the same period last year. Besides that, Enphase raked a net income of $51.8 million, up by 63.5%. Accordingly, diluted earnings per share were 37 cents compared to 24 cents in the year prior. For its second quarter outlook, it foresees revenue to range between $490 million to $520 million. Given the solid quarter, should you buy Enphase stock? End quotes. Notice his question mark at each of the companies mentioned here. This next piece is from a press release by 3BL Media announcing their terrific annual 100 Best Corporate Citizens ranking. Here are some quotes from the release. Recognizing outstanding environmental, social, and governance, ESG, transparency, and performance among the 1,000 largest U.S. public companies. For the fourth consecutive year, Owens Corning tops the ranking. PepsiCo, Apple, HP, and Cisco round out the top 5. The 100 Best Corporate Citizens ranking is based on 155 ESG factors in 8 pillars: climate change, employee relations, environment, finance, governance, human rights, stakeholders and society, and ESG performance. Using a methodology developed by 3BL Media, all Russell 1000 index companies are researched by ISS-ESG, the responsible investment research arm of Institutional Shareholder Services. There is no fee for companies to be included in 100 Best Corporate Citizens. To ensure companies in the ranking were not lobbying against Paris Climate Agreement aligned policies, in 2021, 3BL Media partnered with Influence Map to assess a red flag penalty to such oppositional companies. Taking it a step further, in 2022, a green flag bonus was introduced to recognize firms using their political influence and spending in support of Paris-aligned policies. PepsiCo, Apple, Microsoft, PSEG, and Salesforce were the only companies to receive this green flag. End quotes. Now from the UK is this article: 2 green stocks that I think are no-brainer buys for the future, by John Smith. It's found on 4.co.uk. So to some quotes from John Smith. The first green stock I like is ITM Power. The business designs, manufactures, and integrates electrolyzers to produce green hydrogen. It has a range of commercial potential uses, including as fuel. The only waste is water, and green hydrogen can be stored in tanks for long periods of time. It's easy to see why people are excited. ITM Power is really starting to get up and running. The stock won a project grant from the German government in January. It has secured investment from the UK government last November for the first phase of an ongoing project at the Whitterley wind farm hydrogen facility. The share price is down 11% over the past year, but up 50% over 2 years. I think that with momentum from the recent investments and the prospect of increased production in the next year or so, the share price could really start to take off. There is some risk that the market finds issues with green hydrogen in practice, but for the moment, I think it's a viable form of clean energy for the future. Another company that fits the bill is Greencoat Renewables. I think this is a no-brainer buy, not for share price growth, but rather for dividend income in my portfolio. The company invests in wind and other renewable energy projects in Europe with the aim of distributing returns via dividends. Currently, the dividend yield sits at 5.22%, with the share price up 1% over the past year. I like the fact that Greencoat has projects in different countries in its portfolio. Although there is a lot of exposure in Ireland, it also has projects in France, Spain, Finland, and Sweden. I do know that getting wind projects up and running can be very expensive. This might make it tough for Greencoat to step up to the next level, as private investors might favor cheaper green energy options. However, I think there is enough funding already in this space to ensure the dividends stay generous and consistent." End quotes. Now to an Australian article that could be of interest to global investors. It's titled, "A Top Fund Manager Has Been Buying These ASX Tech Shares After the Market Sell-Off." It's by James Mickleborough and appeared on fool.com.au. Here's some quotes from Mr. Mickleborough. Note, Big Tin Can, yes that's right, Big Tin Can, is a tech company billing itself as a sales enablement platform. Now the quotes. 1. Big Tin Can Holdings Limited. According to a change of interest of substantial holder notice, Australian Ethical Investment Limited has taken advantage of recent weakness in the Big Tin Can share price to increase its stake. The notice reveals that the fund manager has picked up over 8.5 million shares since its last notice. This has lifted its holdings in the sales enablement platform provider to a total of around 55.8 million shares, which is the equivalent of a 10.15% stake. With the Big Tin Can share price down by almost 50% since the start of the year, it appears as though Australian Ethical sees this as a buying opportunity. Second company, Nitro Software Limited. Another change of interest of substantial holder notice reveals that Australian Ethical has also been buying this document productivity software company's shares. The fund manager has increased its stake by around 2.5 million shares to a total of just over 17.7 million shares. This represents a stake of 7.29%. Once again, with the Nitro share price down 46% in 2022, its analysts appear to believe this has created a buying opportunity. The team at Goldman Sachs would agree with this. The broker recently reiterated its buy rating and $2.35 price target on the company's shares. End quotes. Now, articles for UK, Australian and international investors particularly. Again, links on this podcast's webpage. 1. Title: Best ESG Funds from the UK Evening Standard by Andrew Michael. 2. Title: 3 top ASX growth shares I'd buy next week on fool.com.au by Tristan Harrison. 3. Title: AXA IM launches 2 new green investment funds from Investor Daily, Australia, by Paul Hemsley. Well, these are my top news stories with their stock and fund tips for this podcast. Best US corporate citizens and more. To get all the links and stock symbols, or to read the transcript of this podcast and more, go to investingforthesoul.com/podcasts and scroll down to this episode. Also, be sure to click the like and subscribe buttons in Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope in these deeply troubled times. Contact me if you have any questions. Thank you for listening. Talk to you next on June 3rd. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.